Welcome back. Let's bring in another market expert for his forecast on 2025. Sid Mokhtari is with us now in studio. He's Chief Market Technician at CIBC Capital Markets. So we'll have a good conversation involving some technical looks at the markets. What is your view on the markets? I know I've read some of your notes, and you say that mean reversion is a definite risk here. That is a retracement from the big highs we reached in 2024, correct?
I think that's very true. We do have a very elevated RSI on a weekly and monthly basis. Typically does, beg to argue that there is a potential risk to mean reversion. But I wanted to touch on the fact that we had a very good signal that was, produced in November, and that was the Dow theory signal, which both transports and industrials confirm one another.
Right.
That's usually as a pro-cyclical theme for the market. And we tested years following a Dow theory signal. Drawdowns on a monthly closing basis are not that severe. They're not that harsh. They're sub 10% in the U.S. Max drawdown for Canada 12%. But in both cases, we see good buy opportunity in any of those kind of retracements.
You see the S&P TSX composite reaching as much as 27,600 points this year. Is that correct?
For 2025, yes. So when we use measured moves and trend continuation, spread between averages, if we can get a level of retracement for both SPX and TSX, we do estimate that they should both be able to, close the year higher.
That's a pretty big gain. I'm trying to do the percentage mathematics in my head.
Look, I think the durability in financials are likely to persist. We have a yield curve that has become a lot more normalized. We have a steepening backdrop in the yield curve, typically good for financials. And industrials as well, machinery, engineering, they should be able to get buoyed better. Rails haven't done much this year, but we do think, last year, we do think they should be able to regain traction. And the one sector that we think may be able to, as we go into back half of the year, to be able to come back into the picture is the energy sector. We have, right now we're focusing heavily on nat gas exposure, just given how seasonality is better buoyed, in Q1. We're seeing a lot of stocks in nat gas outperforming the oil stocks. So our focus right now is nat gas. But I do think as we go into back half of the year, we should be able to get the broader energy participation.
Okay, and we'll get to some of your stock picks right now, but I'll just tell viewers that Sid also sees the S&P 500 moving higher. It is now at 5,900. His target there is about 6,570, correct?
Correct. These are all arbitrary numbers. We use measured moves, and right. I do think these kind of forecastings are to be altered at some point, but I do think the trajectory of averages and trends are still very supportive for equities.
Okay, ARC Resources is a stock you like, and we can look at it from a technical point of view on your monitor, and viewers will see what you see.
Sure. We do. This is we often use relative strength as well as the absolute. ARC Resources did take out, higher resistance levels, just making new highs. Each low has generally been maintained at a higher level. There's an accumulation tendency for ARC, and does have a very good seasonal backdrop. It's one of the leaders within the nat gas space, so that's a good name for us, and we continue to focus on this name.
What's an accumulation tendency?
Every time it falls, it manages to pick up more volume, and it gets supported at a higher level.
Right.
So that's usually accumulation.
Right. That sounds like a vote of confidence in the market.
Perfect. Well done. Absolutely.
Okay. Gibson Energy, GEI.
This was a very, strong bottom reversal for about 2 years, and this breakout should be able to continuation. We like this name fundamentally too on the desk, and we've been focusing on this name on the fundamental front, as well as the fact that the technicals have also been improving notably. We had PPL as in Pembina, but we're seeing Gibson to be able to relatively outperforming Pembina in the medium term. So we chose Gibson as a better candidate in our basket.
Okay. Sticking with the energy sector, Peyto Exploration, PEY.
Actually, that's another leadership name, 7% yield. So if you're an income as well as capital appreciation kind of a person, lower volatility backdrop, good breakout. This is a good name. We had this in our basket last month. We carried it over this month because we're not seeing any alteration to trend. Relatively outperforming, shows good momentum, and again, seasonal backdrop is very strong for it as well. Okay, we have a couple of financials now. Big market-moving stocks. Bank of Montreal is the first one. This was a name that on the fundamental side we were somewhat on a rather subdued, and then Paul Holden, who covers the name, very positively came out with a very good vote of confidence for the name. The numbers weren't that great, but the stock just did nothing. And it just rallied right up, and it has continued to break out to the higher levels. I think people want to own banks. This is a good area. We do have call it yield backdrop in Canada, and BMO does have a U.S. Exposure, and we like U.S. exposure as stocks as well. So BMO fits all the right bells and whistles for us in our process.
Okay, Brookfield Corporation. We get a lot of calls on this one. BN in Toronto, the parent of other Brookfield companies, and is specifically the parent of Brookfield Asset Management.
I think, Paul, anything Brookfield should be positively viewed, in my opinion, and we often use this name as a core holding in our views. So we try to find this name on pullbacks as an opportunity, and I think this name, you don't have to be a technician to like this chart. Just the multi-year breakouts, uptrend durability, relative strength. It's a good name. This is a name that we often see it in our matrix processes.
We often get a lot of calls from viewers. Which one should I buy? Brookfield Corporation, Brookfield Asset Management. Your call seems to be BN.
Correct for now.
Let's go to Onex Corporation, ONEX, the Jerry Schwartz company.
I mean, SIB on this has been good. Stock did break out. In relative terms, it was a bit of a laggard, but it managed to rebuild itself. A name that we continue to push on the upside. There's no resistance for the name. We like it fundamentally as well. So when we find ourselves in line with our fundamental desk on variables that they see, we think we should be able to pound the table. This has been a good name for us.
I'm looking at the 5-year graph of Aritzia, and it seems to be a technician could perhaps have a field day with it. There's lots of history in the stock, lots of ups, sustained ups, lots of sustained downs as well. But you like Aritzia, the women's fashion retailer.
It's one of the best names in our consumer discretionary right now, right? We had Gildan as a good name, but we are seeing Aritzia actually taking over from a factor perspective in our model. Aritzia, to your point, has been able to maintain its higher low trend. It's definitely probing the previous resistance levels that we think it should be able to continue on the upside. Seasonal backdrop is very strong for Aritzia as you go in Q1. And like I said, it's a name that, to your point, is catching a lot of technicians like myself and quant people's attention out there.
Okay. Sticking with retail, but this is food retail, Empire, one of Canada's big 3 publicly traded grocers.
A name that was a laggard within the grocers and has now reemerged. It is in our improving quad process, and we know we'll also like this name fundamentally speaking. It is trying to make a new price discovery, a name that we like it from a both absolute and relative perspective. And like I said, fundamentally, we recently upgraded the name as well.
Sid, we'll have to leave it there, but thank you so much for your insight. That was a lot of information on a lot of stocks in a short period of time. Thanks a great deal.
Thanks for having me.
Sid Mokhtari.